Guess what? Despite the recent interest rate drop, homes are sitting on the market for longer. Some overall key trends that we saw in the month of June was an increase in the number of listings, a decrease in the number of sales, and an increase in the length of time that it took for sellers to sell their homes. This was quite surprising because with that interest rate drop, a lot of people were anticipating buyer behavior to change, but instead what we saw was a change in seller behavior with a lot more homeowners putting their properties up for sale. As we mentioned though, there was less activity, so the buyers weren't really kicked into action with that interest rate drop.
As we mentioned in our video breaking down the interest rate drop, we weren't really expecting the small 0.25% drop to have a huge impact on prices, but we were expecting buyers to start re-entering the market and to have more confidence long term. And that's the surprising part about this trend, is that we didn't really see many more buyers re-entering the market, but we did see a lot of sellers react in that anticipation and they entered the market instead. Our long-term expectations after the rate drop were that fixed rates were going to continue coming down. We saw the bond market react and come down, so everybody was anticipating fixed rates to start dropping in July. However, the most recent inflation data that came out had inflation sitting at 2.9%, which has put a big question mark on the upcoming July 24th interest rate announcement, as well as on the fixed rates and the bond yield market, which rebounded, and now we're expecting fixed rates to hold.
Before we get into our detailed breakdown of the June stats, if you happen to be a buyer or a seller or just thinking about entering the market and you have questions, feel free to reach out to us. There is a link in the comments below.
We love to hear from you. We love all the questions we've been getting from all the people reaching out recently. We make sure to answer all those questions quickly, so don't hesitate if you have any questions at all. Now that we have a general overview with what's going on in the real estate market and the interest rates, let's dive into the stats behind the trends.
Beginning with detached homes, which saw a median sale price of $830,000 in June. That's lower by 3.82% than the $863,000 we saw in May, and it's also down 8.29% from the $905,000 we saw last June.
Semi-detached homes came in at a median sale price of $665,000 in June, which is a 5% drop from the $700,000 we saw in May and a 2.21% drop from the $680,000 we saw last year in June.
Freehold townhomes had a median sale price of $738,500, which is relatively unchanged from the month of May, which had $737,500. That marks a 0.13% increase. However, this number is a 3.53% drop from June of last year, which had a median sale price of $765,500.
Condo townhomes saw a median sale price of $562,000 in June, which is a slight 1.27% increase from the $555,000 we saw in May, but it is a 3.26% decrease from last June, which was $581,000.
Finally, condo apartments came in at $419,500, which is a 6.26% drop from May, which had $447,500, and also a 7.6% drop from last June, $454,000.
Looking at the overall activity on the market, for freehold properties, the median days on market was 10 days, while the average days on market was 14 days. Comparing this to the condo market, which saw a median of 20 days on the market and an average of 26 days on the market, all increasing month over month.
The total number of sales in the month of June equaled 436, which is down 24.8% compared to the 10-year average for June, which is typically 580 sales. Of those 436 sales, we had 326 coming from freehold properties and 110 coming from condo properties.
These sales numbers also represent a month-over-month drop. When comparing June to May, we saw a decrease of about 7% in freehold sales and a whopping 18% in condo sales. And when we compare June of last year to June of this year, we are once again seeing decreases in freehold properties of around 2% in sales, and condos have 36% less sales compared to this time last year.
In the month of June, we saw 609 new freehold properties listed for sale, as well as 317 condo properties listed for sale. At the end of the month, there was 604 freehold listings, which is a 3.2% increase compared to the month of May, as well as 638 condo listings, which is also a 2.4% increase compared to the month of May.
And finally, looking at the sale versus list price for freehold properties, we are still on average seeing that they're selling a little bit above asking price, with the sale to list ratio being 103.8%. However, condo properties are on average selling for a little bit below the asking price, with the sale to list ratio being 99.3%.
One of the biggest takeaways that we have from the June stats is the number of active listings that we're seeing. That number sitting at over 1,200 is something we haven't seen in a very long time. And when you compare that to the roughly 600 active listings that we were seeing earlier this year, what it goes to show us is that buyers have a lot more options these days.
One of the biggest trends that we're seeing with so many listings on the market is that buyers are tending towards properties which are already renovated and turnkey. These homes are still in demand, and because buyers have so much choice, they're able to pick where they go, and of course they're going to go somewhere that's already ready for them to move in. So if you want to stand out against the 1,200 other people you're competing with, make sure that your home is showing the best it possibly can. This is also great news for buyers. You finally have some choice. After all these years of not having choice and having to jump on all sorts of properties, you can now pick and choose where you want to buy.
Although buyers do have a lot more choice these days, we're seeing them exert extreme caution still, even though that interest rate dropped at the last rate announcement. So why is that? In our discussions with some potential buyers, the general sentiment is still a high level of uncertainty as to what will happen with the interest rates. So a lot of buyers are still exercising that caution as to what the Bank of Canada's next move will be. That being said, when we speak with mortgage brokers, they are saying that they've seen a high increase in the number of pre-approvals. It's just not translating yet into the market.
Sellers, on the other hand, much like buyers, were waiting on the sidelines to see an interest rate drop. They were waiting for that because they anticipated it would bring in more market activity, and unlike the buyers, they reacted much quicker to this news and flooded the market with new listings. Overall, with everything that's been going on and the additional data that we've received about consumer behavior, now the safe assumption is that it will take 1 or 2 more rate drops for buyers to really have their confidence restored in the market and start re-entering.
Thanks for watching. If you found this video helpful, give it a thumbs up. Subscribe to our channel as we post a video weekly.